Howdy folks, I thought I'd just do a quick video update for you. I'm sitting in Charlie's Pizza, just checking the audio, the sound. There's a bit of noise going on in the background, but I'm going to try and ignore that, go through some of the charts with you and some of the overall perspective of what's going on in the markets in terms of really what's happening with the US dollar. So I figured you'd rather hear from me than not hear from me, despite the cacophony in the background and the noise that's going on. I can't use my office at the moment because there's some repair people at the house, and I also apologize for not having made videos recently. But let's have a look at the dollar index first of all, and that's this chart over here, and let's see what's going on. Now the dollar index yesterday rallied quite significantly. This is the day chart. We did break up through that downward trend line. It doesn't mean that this downward movement in the dollar is over. Now the reason I'm talking about the dollar is because everything actually hinges on the dollar at the moment. And the dollar hinges on what the Fed's doing with regard to interest rates. Before we talk about the dollar, let's talk about the Fed. And what they've said is that the general idea is that they may have now reached a point where there will be no more interest rate hikes. So it looks like there's going to be a pause, an indefinite pause, not a drop, not a reduction into interest rates, but a pause. And that's going to affect the US dollar, I think positively, and the markets positively. We've seen the same sort of sentiment through the European Central Bank and the Bank of England and various other central banks signaling that there may be a pause in interest rate hikes. And I think that's overall, without going into too much detail in this video, I'll do a more detailed one on the weekend, but I think overall that's going to be positive for gold, and gold's also being influenced by the war scenario in Israel and Palestine and Ukraine. Whenever there's war, gold tends to go up, the stock markets tend to go up. There was an article I just saw recently about members of Congress and various other parties in the US government investing heavily in defense stocks at the moment. I think it's wrong. I don't think they should be allowed to invest in something in an industry or a business or a complex, you could call it, where they control the shots as to how much money gets spent and where it gets spent and how much money is made. And if they're directly benefiting from that sort of thing, I think that's wrong, morally wrong on so many different levels. But we tend to see gold go up, we tend to see stocks go up when there's war. We've seen gold rally dramatically. Now this is a dollar index. Now this rally that we saw yesterday doesn't mean that this fall down through the trend line is defeated. This is not good news for those who are looking to sell the dollar, in other words buy the euro and the pound, and for those looking to invest in stocks. When the dollar goes up, stocks go down, gold goes down, everything goes down, commodities go down. When the dollar goes down, everything goes up, and we're seeing the dollar being quite resilient. But if I zoom into a 4-hour chart on the dollar, and this is really crucial to this whole scenario, and have a look at how much we've retraced. Yes, we've broken up through that downward sloping trend line, but if I put a Fibonacci study on here, you can see that we've actually only retraced to the 61.8% Fibonacci level of this initial move down. This is a 4-hour chart. So we've moved down, broken down through the trend line, and bounced up to the 618 Fib. And this is really, there's a young infant, just, I don't think having coffee, but enjoying the restaurant. So this is a decent retracement. If we could go all the way up to the 61.8% Fibonacci level, and that's at 107 on the dollar index, it's probably not a bad place to be looking to sell this instrument if you do trade the dollar index, and if you're looking to get into other currencies, buying, for example, euro and pound, Australian dollar, Canadian dollar, Swiss yen, etc. It's not Swiss yen, Swiss franc. So we could stop where we are right now at the 618, and the dollar index at about 106.70, or we could go up to about 107, which is the 78.6% Fib. And if we do reduce dramatically off that 786, and I like that spike high there, I like the fact that we formed a wick high against there previously. So I think that's a pretty good level at 107, but we may just hold below 106.65, which is the 618 Fib. So somewhere around here, I think if we hold beneath these two levels, the dollar index is probably going to continue on lower, and we'll see that trend line be broken again from the top side back down again, and we'll see the dollar index moving down. So let's get rid of some of this clutter. It's always good to clean up your charts and to keep them clutter free if you can. Keep them as simple as possible. You'll notice I don't use many indicators on my charts, like stochastic, sometimes I use that, or MACD or RSI or that sort of thing. As you get more experience in trading, you'll be able to determine when charts are oversold, when there's divergence on the MACD or stochastic or RSI. You'll be able to eyeball it. And what we're seeing here is there'll be nothing that you can learn from any of those indicators, apart from the fact that we may have had a reversal in the RSI and MACD and stochastic at the top here, and now it might be reversing back the other way. But overall, I think the fact that we've broken this trend line is good. The fact that we've broken back above it is not good, but we've got that 618 and 786 fib above us, which is important. So having said all of that, let's have a look at, I'm going to go through these charts. So let's have a look at overall here. I've got, we're going to be talking about stocks as well today, very briefly. But you can see the euro and the pound just falling back to these supports. Now we're long on the euro and on the pound. Pound at around the current level, and the euro significantly higher actually, but I've now hedged the euro trade. But I'm looking for this dollar index to fall down, this one down here, the euro and the pound to gain a bit of a bid, and for the dollar yen to start falling down. Now we're into the dollar yen, so I'm into long euro, long pound, nothing on the others. I'm long on NASDAQ, where we'll come to the stocks in a minute, and then the dollar yen I'm short. So let's have a look at the yen pairs, and you can see the dollar yen. This is a really interesting picture. We're at the intervention level again, where the Bank of Japan intervened last time at 150. We're just below there. We got to 149.85 last night. We're down just a wee fraction, but not much. But we're below that rising wedge. We still haven't broken above it. This is a really crucial level. This is a 4-hour chart, but let's go to the day chart on the dollar yen. And there's that rising wedge. It's a very bearish pattern. You'll notice along with this, and I don't have these drawn on my chart, there will be stochastic divergence, RSI divergence, MACD divergence. Put them all on your chart. If you're going to use a stochastic, use a 1473 stochastic. That'll give you, actually let's put that on whilst we're here now. I'll just quickly put that on, just show you what it looks like. So I'm just going to put in here stochastic. Just bear with me for a minute. Don't really want to make this video too long. So there's the normal stochastic, and I'm just going to double click on there and change the inputs from 1413 to 1473. I'm just going to leave everything else as it is for the moment. So here we go. There's the stochastic. You can see we've got reducing highs on the stochastic actually all the way back to June this year. Look at that high on that stochastic, and we've formed lower highs ever since, even though the price has been moving up, and now we've moved down below that oversold level, overbought level rather, into the center, and there we are on the stochastic. So you can really detect these sorts of divergences by eyeballing the charts once you get more savvy with it. But let's put an RSI on here, and the RSI, I just use the normal relative strength index. I use the normal indicators here, but you can see there's excuse me, divergence on this RSI. You can see the RSI is making lower highs. This is the 14-period RSI, I guess, which is the default, 14-period RSI. And what we want to see is we want to see it get overbought. We have seen that overbought over here all the way back in July. And as we've risen higher in price, the stochastic has been making lower highs until where we are, well, a couple of days ago and where we are today. If we have a look at this on a 4-hour chart, the same thing. I'm going to delete the stochastic shortly. You'll see when you're using the stochastic or RSI or MACD on shorter term chart time frames, divergence is important, but not as important as it is on the long-term time frames. But you can use it to pick tops and bottoms. You can see we've hit the overbought level. We're just turning down on the 4-hour RSI. So anyway, that's the way it is. As the dollar begins to fall off, let's get rid of this. I think we'll start to see the dollar yen move off. But what I was talking about earlier is this is the intervention level, and there are murmurings by various officials in Japan, Bank of Japan, Ministry of Finance, that we might see more rounds of intervention coming up shortly. This intervention was short-lived, although it looks like a tiny little candle. Look at that, from 150 all the way down to just above 147. That's 300 pips almost. But look how tiny that candle looks in the context of this overall picture. So it's really interesting. Not much, but it was a big amount of money that went in there to prop up the yen as it was approaching that 150 level. And we know where that line is now, and it's at 150. We're just below there right now. But more importantly and crucially, we're below this rising wedge line and falling back down. Perhaps technically, and with the drop in bond yields, which we'll have a look at shortly, potential drop in the dollar index. We've seen a big drop in the dollar index, a bit of a rally recently, as we looked at earlier. But all of that will put pressure on the dollar yen and begin to drive us downward fundamentally, technically as well, because of this rising wedge breakdown. and also just because of Japan intervening in its own currency to try and strengthen it against an ever strengthening US dollar. There is not a single currency in the world that over the last 10 years has gained against the US dollar. In fact, the overall decline, every single currency that you can imagine, and I'm sure there's some that you can't imagine too, some exotic weird currencies, but every one of them, and some of them have depreciated as much as 50, 60%, but the average I think it's around 20%. There's a very interesting tweet on Twitter with that chart. I'm not going to try and find it now. By the way, we're talking about Twitter, X as it's now called. If you're interested in following me on a daily basis, go to Twitter and check out my Twitter channel. Here it is, ArcisFX, same name as this YouTube channel. And you can have a look at all of my most recent stuff. I've got some stuff on oil, we'll talk about commodities, got some stuff on stocks. We talk about commodities, stocks, we talk about metals, we talk about crypto sometimes, and we talk about currencies, of course, as well. There's all sorts of stuff on here, and there's a little poll. There's a very interesting, I think, graphic I put up on the oil price, but there's a little poll that I put up yesterday. So if you're interested in having a look at that, go and have a look at that and put your thoughts into that poll and perhaps your comments as well. So that's the dollar yen. We're short on that one, hoping for a big move down. And if it carries on edging higher back up towards the top of this downward sloping rising wedge up to the 150 level, perhaps we'll get a bit more intervention. Now we're short across the board here on euro yen, pound yen in general. Some of these are hedged, but we did in my trading room take a short on the euro yen about 100 pips ago above us. I think 158.15 or 20, and we're at about 157.35 now. We got down to about 157.30, so about 85 pips. I'm exaggerating, but moving down. Swiss yen moving down, CAD yen moving down. I'm not going to go into the technicals on all of these charts, but basically whatever this one does here on the top left, the dollar yen, is going to affect all of these in a similar way. And it doesn't matter what you do really, as when the yen strengthens, it strengthens against the board. So that's what we're hoping for. These starting to move into some decent profit. Now, don't get me wrong, I've traded the yen very poorly over the last number of months, and I've been hedged, unhedged. I'm confident that we'll sort all of this out as we start to move in. There are projections by various economists around the world, Wall Street Journal and Bloomberg and various people in Japan who specialize in that market, that see the dollar yen number being closer to 130 than 150 at the end of this fiscal year. That's about 2,000 pips below us. So this is at some stage going to have to move down, and these will all move down with it. The problem is there's a cost of carrying these trades, of course, because of the interest rate differential between the US and Japanese yen, the US dollar and the yen. So there's a carry cost, which creates the carry trade, which actually is what drives these markets higher. Because if you sell yen and buy dollars, you gain 5%, a little bit more actually. So it's money for nothing. So that's the yen pairs. And this video might be a bit higgledy-piggledy and noisy. Please forgive me again. Please, as well, if you can put up and stand this noise, please consider subscribing to this YouTube channel. And I'm going to have a sip of coffee because I'm getting a bit hoarse. And this noise is driving me batty, but we'll be okay. They make really, really, really good coffee here at Charlie's. Super strong. So, my idea on NASDAQ and S&P is that today we're going to move higher. Now, there's a number of reasons for this. Let's just have a look at, first of all, NASDAQ. And again, I'm going to have to make a whole new video on stocks at some stage. So this is the NASDAQ. People are saying, here's the bottom line. I think stocks are going to move higher. We've got an election year coming up. We've got interest rates going to be on hold. We've still got a bit of spare cash floating around. Earnings, they say, are not going to be that bad. I'm not too sure about that, but I think we're entering the earnings season. I think Tesla, for example, might do okay. They seem to have broken all their sales records. I know PC sales are down worldwide about 20% currently. That might put a bit of pressure on tech stocks and chip stocks and so on. But overall, I think there's still a bit of room to the upside. I'm a little worried that everyone's getting bullish on the markets. Everyone was bearish a few weeks ago. Now everyone's bullish. But there are still some bears around. We're still in the greed, in the fear phase rather, in the market. So buy the fear, sell the greed, the normal story. And people are saying, well, we've got lower lows and lower highs on the Nasdaq going back into July. We've had a decent correction, but let's just see what sort of correction we've had from top to bottom. That's about a 10% correction from the recent high. We haven't reached the all-time highs, which are right up here, but that's about a 10% correction, not insignificant. But yes, and we've got lower lows and lower highs. But just look at that. It's a bull flag. It's about as beautiful as you get. It's about as neat as it gets in terms of a bull flag. And we formed this bottom down here right into support, as it should. Beautiful length. This flag's not too long. It's not too short. And formed a beautiful bottom there. Huge rally a few days ago, I think that was Friday. We're in Friday now, Friday the 13th. And we made a higher high yesterday, even though we closed with a lower close than the previous day. But I think that's just a bit of a pullback. Look where the 100 and the 50 period moving averages are in the day chart. We bounced off there yesterday beautifully, big rally back up again, and we're holding above there now. This is overall a bullish pattern. If we can break through the top of this channel and hold above there today, then we should be seeing this move up to at least 16,000, 15,950. And I think we may even see new all-time highs this year or early next year, and then followed by a collapse. And that collapse might actually only happen after the elections are over, and that's what my poll's all about. Do you think the US government, the current incumbents, the elected people, and their non-elected beneficiaries or benefactors, do you think they'll allow a market collapse and a depression to happen before the elections, or are they going to try and protect their elected role in the US? I think possibly there's a great deal of vested interest in staying in power, and that they will not allow these markets to collapse, and we might have to wait a whole year. But that's just conjecture and a little bit of conspiratorial thought. But that's where we are in Nasdaq. Now, if we look at, I'm not long on Nasdaq yet, but I'm looking to get long today if we see some opportunity. But we are long on S&P, and same sort of thing on S&P. Now, what we saw yesterday was just interesting. A higher high, a lower low, but a higher. We closed higher than yesterday, the previous day's low, and we formed a higher high, even though we've got a bearish candle, and it's slightly, it's almost an engulfing candle. But look where we bounced. There's the 20 period moving average, there's the 38% fib, there's the channel center line, this dotted line, and we bounced a few days ago beautifully off this 200 period moving average. We're in this channel similar to the Nasdaq. It's a bull flag potentially if we break through the top. We do have lower lows and lower highs. People keep on pointing that out, but in order to get a bull flag, you've got to have lower lows and lower highs. There's no way around that. So either we're moving down and we're going to break through this bottom here, then I think it's pretty much tickets. We've got a long way to go. We might just hold 41.50, but failing that, we're going to go all the way down to 4,000 and then start moving lower quite dramatically, I think. But I'm betting on the long side today. It's Friday the 13th. We want to see this week close out strong. Let's have a look at the weekly chart very quickly and look at that week candle last week. Beautiful bounce off that support, off the 100 and the 50 period moving average. Absolutely phenomenal. Just, you don't get better than that really. And the channel bottom, it's phenomenal really. A beautiful reversal candle last week, and this week so far we've got a higher low and a higher high. We want to close up above this 20-week moving average if we can today. That's in a few hours time. Well, it's 1 o'clock here at my time now, so markets close at 11 o'clock, so it's about 10 hours. We've got 10 hours for this market to move above that level there, 4400, and above there, above the 20 period moving average, and close this week on a strong basis, and perhaps even get to this weekly channel top on S&P, and then we'll have to decide. And that weekly channel top is around 44.60. Let's see how we go. I think overall I'm happy with this. I'm looking forward to potentially a good trading day, or it could be a terrible trading day. It could be absolutely awful, but we're in that long, and let's see how it goes. Interesting thing about the stock market is that the stock market is inherently optimistic. There are an awful lot of bears around. Bears sell clicks. Catastrophe, doom and gloom sells clicks on the internet. That's why you see it all over the show, on YouTube, on Twitter, on just the general news, mainstream media. Anything that's negative or catastrophic or war, market collapse, gold collapse, whatever, makes everything look terrible. It draws in the fear factor of viewers, and people want to watch it, and it draws in clicks. But overall, actually, the stock market is inherently positive and optimistic, and generally it goes up year after year after year. There are some years where it goes down, of course, but generally it's an optimistic market, and people want to make money when the markets are going up, not as much when the market's going down. So that's where we are. So if we do see that, we need to see Nvidia, Apple, Tesla, AMD, Microsoft, Google, and perhaps even Birkenstock have a bit of a rally today. Birkenstock, the shoe company that opened with an IPO yesterday, and unfortunately, I think closed about 15% off their IPO offering price. So that's that. Now let's look at gold. Well, gold has just, of course, been magnificent. Same thing as silver, not as much, but look at gold roaring upwards. We're not seeing the same sort of thing on platinum or palladium or uranium or copper. Copper's going down. I think we'll come to gold shortly. Let's just talk about silver and copper. I think copper's going down. We've broken down through that trend line. We've broken down through this horizontal support level. And copper, Dr. Copper, is indicative of demand for building and construction, electricity, etc., etc. And when there's a recession looming, which we don't know is true or not, but there's definitely a downturn in demand for building and construction, copper will tend to come off, and we can see this moving down. A rounded top there, beautiful rounded top, breaking down through support, down through this trend line. I think copper's going down to 330, maybe 320, and potentially even lower than that. And I don't know if we can get this, I don't know why it's not. And potentially even lower than that, down to as far as $2.60. So something like that on copper could go a long way down if we see an overall malaise in demand due to construction and building and so on. So that's copper. And then silver, I'm actually not going to talk about silver because we're running out of time. Uranium, here's my path. We'll come to gold right now. Here's my path on uranium. I want to be buying somewhere around here. So far, so good. I think there was a blowout, over-exaggerated, over-exuberant, FOMO creeping in, too much excitement. Everywhere you looked, it was uranium this, uranium that. Everyone, YouTube, Twitter, news reports, Bloomberg, Wall Street Journal, everything was about uranium. And as soon as you see that, you know it's time to get out. We got out, we took our profits, and we're waiting for a dip back down to the bottom of this channel line, and perhaps a breakdown through it, in fact, just to create the same pattern to the downside as we did to the upside. In other words, stop out a few of the bulls who get long here. So we got rid of a few bulls when that failed, and we might get rid of a few bulls as well when this bottom channel line fails. We break down through there, get rid of those, get out the weak hands, and get the real liquidity and volume. There's that high there, right there, 23.30. That previous swing high is where I'm aiming for, and you can see that aligns with the bottom of that green arrow, that green path, and then that path heads up to about $32. So that's my idea on URA. Yeah. So I hope I'm covering everything. We haven't still got to. Oh, there is one more thing. We're going to get to oil, of course. Here's. Sorry, I'm rushing through this. I seem to be a little bit weird in my presentation here, but it's just because it's a weird environment. Now, let's go to the day chart on gold. I think when we get up to 1900, 1905, this line here at 1908 is a very, very important resistance level. We've now already overbought, and there's the 50-period moving average right there, the red one. The black one is the 100-period moving average. This is a day chart on gold. The blue-purple line, this one here, is the 200-period moving average. Those are all stacked up between 1900 and 1930. And I think, even though I think gold is going to new all-time highs, and that this war might get out of hand, this Israel-Palestine war, we might get Yemen involved, we might get Syria involved, we might get Iran involved, probably already involved. And it could become a much broader conflict. I think that fear is not going to go away quite some time. That's going to continue to drive gold up. And I've been adding to my gold positions as this has moved up. Don't want to get caught too long on this, so we'll be covering some of these positions at around 1900, not covering but hedging, and I'll be adding some short hedges between 1900 and 1930, somewhere up here. There's the downward channel line. So that's definitely, that zone there at 1930, it's probably going to be the key resistance level for now. And then we might get a bit of a pullback, gather some more liquidity and so on. So that's that. Now let's go across and have a look at two things I want to have a look on here. Three things. First of all, US 10-year yield. This is really good news for those who are looking to buy stocks, to buy gold, to buy currencies apart from the dollar, like the euro and the pound, the Australian dollar, the Canadian dollar, Swiss franc, etc. This yield formed a double top there. I pointed this out days ago, and beautiful twin peak. I think there's a TV show called Twin Peaks in the US. A twin peak there, beautiful drop down, breakdown through support, back test of support, this channel midline, so breakdown through there, back test above it, back into it, and breaking back down again. That's going to drag down the dollar. That's also going to allow for markets to rally, because this is all good news for the markets in general. When this bond yield starts to drop and we see that it becomes less attractive to remain in dollar and dollar assets, we're going to see some of these other things begin to move, like gold and the others. Now look, going back to the DXY, we see that the dollar index has not followed suit just yet, but normally where this leads, the dollar will follow, and that's pulling down beautifully now. We've got the 20-day moving average right there, and we need to break down below that and close beneath it. We have not done that yet. The last time we did that was quite a long time ago, in September 23. Hang on, is that right? Yeah, August this year. And we haven't broken down, we haven't closed beneath that 20-period moving average. We need to close beneath there, beneath these lows, move down to the bottom of the channel at least, to start drawing dollar down and start encouraging stock markets and so on. But that in itself, as it stands at the moment, is pretty good. Now, natural gas. We went short at, let's just have a look. This chart on natural gas is very, very similar to the uranium chart. Let me just show you. Here's the natural gas chart. Have a look at that. Just put that in your sort of mental mind and think about that, and then I'll switch to the uranium chart and show you the same sort of thing. Now these are not the same thing at all, but they just look similar, so just out of interest. So there's the channel, spike up through the top, break down, and heading back down. Let's have a look at natural gas. Same sort of thing. There's the channel, spike up through the top, break down, heading back down. We went short at $3.43. We took half our profit at $3.23. We almost got stopped out yesterday at break even, but my order's still in. I think I got at 341.5, or 340, just below 342. I could put on these precise numbers here if I wanted to. But that high there didn't quite reach our stop loss. And I know that a lot of people actually added additional short positions in here. Some of my members and some of the other people that I talk to are trading this every day, added extra shorts when we retraced on that bounce. That bounce actually incidentally formed a very bearish pattern. Now you might say, well, yeah, we formed a sort of a spike high, a wick high, followed by another one, and then we had this strong bounce off that channel top. And that looks pretty bullish, right? Move down to the channel top, rejection, sharp rejection from there. That's a hanging man candle. We've got two tweezer, we've got almost a tweezer, basically a tweezer top, actually that day and the previous day. And we've got definitely a tweezer top, but it's also a hanging man candle. So we have a spike high, tweezer top, hanging man candle pattern, and now moving back down towards the top of this channel. This is my path on natural gas. This is what I'm hoping for, thinking of. Moving down here, you can study this in your own time. I think we could get to the bottom of this channel, and if we do something like I think uranium might do, we could even get down through this channel, back down to about $2.50. Look at uranium. This is what I'm projecting on uranium. Break down through the bottom of the channel, down into some of these support levels, that level there particularly, and natural gas potentially. This move will take us down through the bottom of this channel. We're going to get rid of a few bulls here if this breaks back down to the channel. Going to stop out a few bulls, and I know there's a lot of them around. A lot of people went long on natural gas when we broke up through there, and if we get down to the bottom of this channel, a few more bulls start piling in. We might need to get rid of those too, with a breakdown through there, back down to 250. I know it's exhausting, and I know it's tedious, and we've been there so many times, but that's the nature of trading. Look for these extreme moves and high probability trades. Those will stand you in much better stead as we go along. So I'm going to be looking, we have a small short position. It's only half the position now. half my original short position, but I'm going to be looking to hold this down towards this channel bottom, probably take profit there, and then look to maybe put a piece of maybe a small trade long on at the channel bottom, but certainly not the whole amount. I'll be looking for $2.50 again, believe it or not, to add the rest of it on, back for a move back up and a move higher once again. I don't know if that's going to work out. I have no idea. We could simply bounce off here and rally up higher, up to $3.50, $4, $4.50, $5. I don't think that's going to happen, but I'm not ruling that out at all. So 70% of my trades I win, 30% I'm going to lose. That's 3 out of 10. It's a lot. 3 out of 10 is a huge amount. Now, WTI. Just to mention wheat and sugar before we get to that. Wheat, I think go and have a look at my Twitter channel for wheat. And also, if you're part of my trading group, if you're not part of my trading group, let me just say, there's a link underneath this video. You can join up there for 14 days free of charge. You won't be charged a penny. Go and check it out. We talk about all of these things every day, and I put up charts all day long. I also put up extra news from Wall Street Journal and Bloomberg, all the things I pay for, and you'll have access to some of that stuff as it comes out. But WTI, this is the interesting one. I want to refer you back to my X feed, where I did put up this thing on this comment, overall comment on crude oil. So have a look at that. It's on ArcisFX on Twitter, X. But overall, and that gives me the sort of my sort of guideline for where I think this is going. I think oil is going down. Demand over time is not going to increase. That seems to be very clear. New oil fields and new sources of supply are increasing all the time. That's beyond dispute. So we've got extra supply, we've got stable or at best potentially reduced demand as time goes on, and we've got prices, oil prices at very, very, very high levels. Currently, let's have a look at this chart again on, let me just show you, if I can quickly show you this chart. I don't have this chart. There it is there. Price from 1976 to present. That's where we were in 76. That's where we've been recently. That's this recent spike high we've had up here, up to about $100 a barrel, thereabouts, and above. And that's a rounding top. And you can look, demand is going to be stable. This is from Statistica.com. Fantastic website, by the way, Statistica.com. Demand's going to be stable. Proven reserves are increasing, and we're at very, very high levels, historically high levels. Yes, there's inflation, but this is not inflation driven by demand. Demand is not going to increase, but reserves and discoveries of oil are going to increase. Peak oil no longer means we've run out of oil. It means we don't need it anymore as much as we used to. Do you remember in the 70s and 80s and 90s and even 2000s, there was this concept of peak oil. We're all going to run out of oil. Oil price is going to go through the roof. The world's going to come to an end because there's not going to be enough oil. Now there's too much oil and not enough demand, and it's completely flipped. I think I'm bearish overall on crude oil, and so that's going to inform everything that I do in general. And I think at $86 to $100, it's really expensive, but I think we could get back down to 60, and I think we could get back down to 50. In the near term, or relatively near term. So somewhere down into these levels. This is a day chart. Let's have a look at a weekly chart. I don't think this goes back that far, but do you remember when we dropped below zero in 2020? Look where we are at the moment. This is the overall price. If we go back to 76, these overall levels are pretty high price levels, but even in the short term, we're at quite a high level. I think we could get back down into the 60s and potentially even the 50s and even lower. So I'm going to be looking to sell into rallies, and today, if we can get up to, generally, look, there's going to be a bit of pressure on oil prices because of the situation in Palestine and Israel. That might drive prices up, but that will be an opportunity to sell. And I think if we can get decently high prices, good rallies on WTI and Brent crude, this is a WTI price, Brent crude chart's pretty similar. But I want to get back up to this channel line here. I want to get up to $87.60, the 20-period moving average, up to the underneath of this channel to sell WTI for a move down, back down to 77, and then down to 67, and then down to 57 perhaps, something like that. That's my plan. And I think I've got a copy on my slightly hairy lip. Haven't shaved today. So that's that. So that's oil and natural gas. I think bearish on both of them, interestingly. But natural gas, I think at some stage, around about 250, you'll be looking to buy again. Now, I know a lot of you won't agree with me on these, and I could be completely wrong about oil and gas, but that's my view for the moment. Unless something else changes, that's the way I see things, and I don't mind being wrong. You can read any number of magazines, journals, articles, tweets, YouTube videos, and they all tell different stories. Half of them be wrong, half of them be right, and I'm just the same as everyone else. Sometimes I'm wrong, sometimes I'm right. Quite a lot of the time I'm right, but it's only at best 70%, which means that 3 out of every 10 trades that I take are going to be completely and utterly wrong. So that's S&P, NASDAQ. We're looking to buy. We're already long NASDAQ. Perhaps looking to buy some of these stock names, NVIDIA, Apple, Tesla. Perhaps we can get a break up through there on Apple, through that 182 level. Tesla, I don't know. This is my idea on Tesla. That was my idea. I drew this line in a long time ago. But we might just move straight up from here. There's the midline of the channel. And then we've got this big resistance level at 300. And that's the big stumbling block before we get to the all-time high at around about 312. I was buying Tesla when it was $100. Can you believe it? We're now at 258, 68, 58. So when we dropped down there, I bought quite a lot of Tesla, and that worked out well. I thought we were only going to get up to this level at around about 200 at best, doubling the price from the bottom, and that we were not going to move higher, that the overall markets were going to move down. But actually, look where we are today. So anyway, so we'll have a look at a few of those stock names today. Again, if you'd like to participate in some of the stuff that we do, you can try it for 14 days free of charge. The link's underneath this channel, and I'll also put a link on the screen here as well. And that's that. And then the yen pairs, we're short on some of these, euro yen, dollar yen, and then that one's in good profit. Dollar yen, we got stopped out of 1 yet again, but the second one looking better. And then the dollar index, looking for that to come down as those bond yields are dropping rapidly, and therefore a rally in the pound and in the euro. So pound and the euro to go up, same with the Aussie dollar, and NASDAQ and S&P. We're looking for longs today. It's now 2 hours to go before the markets open. Hope you've enjoyed it. And again, if you've enjoyed the video, sorry about the noise and well, it's quite a nice place to work anyway. But I know it's a bit distracting and irritating for you to watch, but at least you got the video. So if you did enjoy and appreciate the video, I'd really enjoy and appreciate a thumbs up from you. And if you would like to consider subscribing to the channel, that would be great. Have a fantastic day. It's a weekend. It's the Rugby World Cup 2 quarterfinals coming up, Saturday and Sunday. We've got France and South Africa on Sunday. We've got Ireland and New Zealand. They're both knockout games for those rugby aficionados. It's going to be a great, great rugby weekend. Take care.